All opinions and views expressed by the speakers are not representative of views and opinions of RBC Dominion Securities, Inc. All information and opinions provided in this video are in good faith, but without legal responsibility.
Thank you for joining us again at Wealth Management in Motion. I'm Miles Durko, Senior Investment and Wealth Advisor at RBC Wealth Management in Winnipeg, Canada, and it's awesome to be back together today. Today, I want to talk about something amazing, but it's amazingly sad, actually. I want to talk about missing the best days in the market and what that does to your portfolio. But before that, I'm going to talk about bear markets. We've talked about how over meaningful time, the markets go up meaningfully. But what we also need to talk about is that over a meaningful period of time, there are also occurrences where the market goes down substantially, and we call these bear markets. There's a lot of people here listening that might be thinking, what's a bear market? I've heard about it in the news. It's a bull market, it's a bear market. One of them's good, one of them's bad. We don't know which is which, but I'll tell you, the bull market means the market's going up. A bear market means the market's going down. And the actual definition of a bear market is a decline in the market from its peak, its top point, to its trough, its bottom point of at least 20%. If we're down 20%, we're in a bear market. Over the last 65 years, there were 17 bear markets. Each one of them, the market was down at least 20%. The mathematical average drop of these bear markets was about 30%. And 3 of these bear markets, the market was down about 50%. So while the market goes up beautifully over a meaningful period of time, it gives us a lot of opportunity to get scared. The most important thing that we need to do when it comes to our investments is not to panic. Peter Lynch, one of the greatest investment minds of our time, said it so eloquently. I'll just paraphrase him. He said the most important thing when it comes to your investments is to not get scared out of them. Easier said than done when you're down 20, 30, or 50% in a bear market. I heard a story once, such an interesting tale, and it was about Warren Buffett. And it was about Warren Buffett's personal share value in his company, Berkshire Hathaway, and how it declined by about $6.2 billion in the summer of 2011, over about a 5-week period. Talk about sleepless summer nights. $6.2 billion. Now, how much did Warren Buffett lose during that 5-week period? I'd suggest to you that he lost nothing. And why didn't he lose any money? His share value was down $6.2 billion. The reason he didn't lose any money was because he didn't sell. He didn't panic. He didn't sell. He knows what he owns. And here's what I want to suggest to you. I think there are 3 things that we all need to know about our investment portfolios to feel confident and secure and comfortable. We all need to know these 3 things. First off, we need to know where our money is. When we look at our portfolios, do we know where our money is? Do we know how much is invested in stocks and how much is invested in bonds and how much is in cash instruments? Do we know how much of our investments are in Canada or the US or Europe or Asia or Latin America? Do we know where our money is? Once we dig in and understand where our money is, the second thing we need to know is, why is our money there? If we're dealing with an investment company, we have a financial advisor, we need to ask, what's the research? What's the rationale that went into building my portfolio in the manner that it's been built? Once we know where our money is, once we know why our money's there, the third and last thing that I think we really need to know about our investment portfolio is, what can I expect from my investments? What can I expect from my investments in terms of income? How much is going to come to me in the form of dividends? How much is going to come to me in the form of interest? Are those payments coming to me monthly, quarterly, semi-annually, or annually? I want to know how much income is coming to me from my portfolio. And you should also know how much income is coming to you from your portfolio, and not just income, but growth. In normal times over history, with a portfolio built the way yours is built, what kind of growth has been generated on a portfolio like that? Going forward, what kind of growth can be expected from a portfolio like that? Not only in good times and how much growth we might get, but if we get another bear market, if we go into a recession, if we have a market corrections and turbulent times, how much can your portfolio be expected to fluctuate by? Because once you know where your money is, why your money's there, and what your portfolio is likely to do in both good times and bad times, you're well on your way to inoculating yourself from panicking and doing the wrong thing at the wrong time. Let's talk about what the wrong thing at the wrong time is. The wrong thing to do is sell your investments in a panic. I've looked at the research. The research says over the last 10 years, the S&P 500 has returned 13% per year on average. But if you missed just the 10 best trading days, your investment would be cut in half. Your investment return would be cut in half. And instead of getting 13%, you're only getting about 6.5%. If you missed the 20 best trading days, your investment over those 10 years would have been 0. And if you missed the best 50 trading days in the last 10 years, instead of just staying invested, instead of getting on average 13% a year, you would have in fact lost about 4% a year. That is a huge differential over 10 years of making 13% a year on average or losing 4% a year on average. That's huge. And all you have to do is stay invested. I'm going to ask you to do me a favor. Give me a like, subscribe to the channel, and I'm going to do you a favor. On my website, milesdurko.com, I have a section called Insights to Impact. It takes all the ideas we talk about and gives you actionable information that you can download, put in your hands today, that's going to add value to your financial lives. Go to milesdurko.com, Insights to Impact. It's right there for you. Again, my name's Miles Durko. I'm right here with you in the heart of it all at Portage and Maine.